Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, October 4th. Not a lot in economic news, more headline news today. So, we'll kind of jump into it for you. The only item for economic news releases today is actually the factory orders. Back in July, we had a 2.1 reading, so not bad. And we figured it would be a little bit of a drop. And well, we did get the drop, so a negative 0.2% for August. So this is for August numbers. Factory orders did dip, unfortunately. That's not obviously good news. So let's go ahead and jump at the headline news. For the most part, stock market's down. Nasdaq's about the only one that's up. S&P and Dow are down a bit today, and a lot of this has to do with again concern about Euro's bank solvency. There's concerns about Dexia and Deutsche Bank. A lot of it, looks like they're paying a lot of losses due to the debt crisis that's going on there because they're part of the ones that are buying these bonds from Greece and Italy and Spain and such. So this is creating a credit crisis. They're having a hard time even borrowing amongst themselves. So because they're having a hard time uh, borrowing amongst themselves, they're of course not really lending out to the consumer or corporations. So kind of what we faced here earlier on around 2008 with the credit crisis we had faced, they're doing amongst themselves right now over there. So this is creating a big problem over there, which is kind of creating more. Basically, it looks like they're definitely going to be going into a recession. So it's kind of inevitable as it's kind of becoming, as they go into recession, it's becoming inevitable that we're doing a double dip over here in the US. So also Bernanke spoke today. Basically, he made comments about other items that we potentially could do. He's kind of doing a wait and see approach, see what happened, and but for the most part, I think he's just kind of gonna let this kind of run its course, so to speak, because we don't any too much government interference can create problems down the road. Maybe too much inflation and such, with the high debt we're kind of accumulating here. But right now, he's basically doesn't really see any good job market in the near future. So, unfortunately, some negative news, and but some good news. We keep hearing about all these people cutting jobs. But good news is Ford, the UAW had a new contract that's calling for 12,000 new hourly jobs for 2015. So that's kind of good news, and also some of that to be insourced. So some of those jobs brought from overseas brought back to the U.S. So that's kind of good news. Kind of nice to see something different there. So touche to Ford and the UAW for uh, coming to helping us out here in the U.S. So let's go ahead and take a look here at the bond market and the where interest rates are going. Uh, Look, we had this trend here as we saw where we were going upwards here. Today it kind of broke off a little bit, but as I mentioned yesterday, we did have an opening gap here, and today we're kind of closing this. I wouldn't be surprised if we see a run up maybe later today or perhaps tomorrow and it'll run back up. I say that primarily because most of the economic news, all the news there would be typically would be boring into the bond market. And today we also had the Fed. They're starting that twist program, which they did yesterday, which is the reason why we kind of had a nice little run up further yesterday. But today they're also buying the 10-year Treasuries, about 45 billion in the in the 10-year Treasuries. So that could help us out as the stock market's down. So again, that could be there could help out the mortgage-backed securities here. And then tomorrow we got the ADP jobs. We got the jobs later this week. That will be the big thing, as we're not too keen on what the job market's looking like so far. So, but right now the rates are down. But again, this could improve later today, perhaps even tomorrow, as to all indications show that it should be better today. But they're probably paring in some losses or paring in some, cashing in some of their profits as we speak. So, but that could quickly change. So interest rates are higher today, but again, they're still extremely good levels. And again, go to Mike's Daily Market Report. Do me a favor, jump on Mike's Daily Market Report, register or subscribe. Love to see you get the daily emails from us so you can get these updates. You guys have a wonderful day and see you tomorrow.